Well, good morning, everybody. Welcome back to the ROS Media channel. We are live across our socials today. So we're live on Facebook, we're live on YouTube, we are live on X, we are live on Instagram. Let's just make sure that we are also live on our Telegram channel. So I'll make sure that we can plug that in too and go live there. And then we will also make sure that we are live here. So, okay, Telegram is looking good. And Instagram is also looking good. So let's now continue with today's session. So grateful to have you all with us, guys. If you want to make some comments, please do. We've got a comment section there. So we've got people that are coming into the comments, which is great to hear. I've got collated all the questions from last Saturday's webinar just gone on the 8th. And we're going to go through those section at a time, and we're going to introduce what is going to be a sneak peek also at the end for this coming week's webinar. So stick around if you want your questions answered from Saturday's webinar, and then we're going to give you a sneak peek into what's coming up this Saturday as well. If you are brand new to our channel, welcome. My name's Andy. I'm in charge of the media platform here. I'm with my very good friend Ian Clifford, who is the founder and president here at the Republic of Old Souls, and also responsible for the protocols that we talk about on our weekly webinars. So just to give you a heads up of how we do things content-wise, okay? At Mondays, we do the Q&A, and that is the Q&A from the previous webinar. On Thursdays, we do a deep dive into a subject matter that is going to be covered on the webinar on Saturday. And then every Saturday morning, 10 a.m. UK time, we have our flagship webinar that goes out as well. You do need to register for that. Seats are limited. We'll talk about that at the end of today's session. And we just rotate those as well. So we've got webinars on Saturdays. We do the Q&A for the webinar on the following Monday, and then a deep dive into what's coming up on the next webinar on a Thursday. Typically, today's sessions and the Thursday sessions are between 11 and 11:30. Saturdays is always 10 a.m. And what we're also doing right now is we're also talking to some of you lovely members as well. You may recall, if you've been on one of the webinars over the last couple of weeks, that I've opened up some time in my calendar to have a chat with some of our members, find out what it is that they're doing here, what they're learning, why they resonate with what we do here at the Republic of Old Souls, and also what are they looking forward to. So if you want to be a part of that, then what I'll do is I'll post a link here in the chat in a second. That'll go through onto the socials as well. If you want to book in and have a quick 10-minute interview with me about your journey here at the Republic of Old Souls, then I would love to talk to you. So Ian, got such a lot of questions today from Saturday, some really well thought out ones again. So let me dig in. So Saturday Q&A, I think 7 different sections now of questions that we've got together. Section number 1 is to do with framework due diligence, also Title 26. We've had some questions come through from that. In fact, the first question is about Title 26 due diligence. It says, what specific sections and subsections of Title 26 Internal Revenue Code does the IRS rely upon to recognize and process this fiduciary tax redirection?
Well, that's, yeah, you'd have to read all my research papers, really, because I quote all of the IRS references in there. I mean, it's not just one statute. It's not the Clifford Protocol IRS statute that you could quote back. There's a whole range of them. If you go through it, you've got the Foreign Grantors Trust. I think you've got section 302, 303 of the Uniform Commercial Code, which enables the Foreign Grantors Trust to file as a foreign alien, because that's what it is. It's a separate foreign alien independent entity from the bankruptcy of the United States. You've got the CAF, CAF, which is the tax preparer's CAF license, which you can't file unless you've got one of those, together with an EFIN license. So you have to have the tax filing licenses. You then are using tax 1099, which is an approved IRS tax filing software, which you can't file anything electronically unless you've got permission to use that filing software. You can't get permission to use it unless you've got the right kind of entity to file from. That's the foreign grantor trust as the entity making the filing. And then you're filing through the tax preparer's software, which you can't use unless you've got a CAF, which is a standing. You've got good standing with the IRS to file tax returns. And then you've got the EFIN, which is the tax preparer license. So you've got to have all those things before you even start. Then what you need is you need the taxpayer identification number. Then you need the CUSIP number of the securities that you are looking to redirect the federal taxes on. You need all of those things to make your filing. So it's not that you rely on a statute and send us a tax redirection. There's a whole series of infrastructure stops, if you like, that you have to put together to make it happen. If you then look at what does the IRS, what are they actually looking at? Well, 1099 OID filings are to do with federal income. It's to do with federal income. So it's backup withholding taxes on federal income. Where a lot of people are not realizing this is that the securities which are created by the signature become federal income to the nominees, the banks operating as nominees. So the banks are reporting federal income. They should be completing 1099 OID because they're nominees, but they don't. They don't complete the 1099 OID. They file taxes under their 945 tax module as a nominee. The IRS then receive their tax, whatever the taxes are. They're all different depending on, looking at all the taxpayers. The amount of tax they're paying on the 945 module. If then the foreign grantor trust files 1099 OID, having taken the instruments for value, because it's saying that it is now the creditor to these instruments. It's going to file 1099 OID because the nominee hasn't filed 1099 OID, the bank being the nominee that's holding the instruments. Then you've got the IRS algorithm that is going to check to make sure that there is sufficient taxes. It's going to check the taxpayer's identification number. That's the bank as the taxpayer. It's going to check the recipient's tax reference number, which is the EIN number of the foreign grantors trust. It's going to check the CUSIP number of the security that you're redirecting the taxes on. It's going to check the amount of taxes that have been funded already by the taxpayer, the bank as nominee, to make sure it's equal to or greater than the tax redirection federal income. It's then you're then going to file 1041, or the tax preparer is going to file 1041, having received an entry on the IRMF system, which is the Internal Revenues database, basically, of all of the tax movements on each taxpayer account. You have to look at that. You have to make sure that the wages and tax transcript is posted on the IRMF system. Then you can file your 1041 if there's sufficient taxes that have been funded already by the taxpayer, the bank as nominee. Then you get into TRIAS 310, which is the automatic distribution of the tax redirection, which is federal taxes. It's backup withholding tax that the banks have paid to the IRS for the use of the credit, which they're paying under the 1099 element of the 945 tax module. If you add all that I've just said together and then go and reference all of the statutes, the tax statutes, which I detail in my reports, you will see a blend of UCC, Uniform Commercial Code, and IRS statutes that support all of that I've just explained. I don't reel them all off. I have to go and read my research documents.
No.
I don't remember all that. I mean, quite honestly, they are irrelevant to the process once you've locked the process down.
Yeah.
So if I was being put on the stand in a court case and had to quote them all, I'd have to read them from my research papers.
Yeah.
I don't remember them all because, quite honestly, they're irrelevant to the process. The process relies upon the statutes, but I don't remember all the statute reference numbers. I put them all in my research papers. At the time I research them, I make sure they're viable, they're appropriate. I put them in my research papers, but there's loads of them.
Yeah.
And I couldn't reel them all off. A, because probably hardly anybody's ever going to ask me to do it.
No.
And B, because they're in my papers, and that's why I put them in my research papers.
Yeah, exactly. So for the purpose of answering this question fully for this member, if you do want to know what all of those statutes and codes are, then you can go here, go to ecclesialaw.is, and then look for Ian's papers on the treatise, look for the Clifford Protocol as well, where there is a detailed breakdown of everything that you are essentially asking for here, including all of those UCC codes and the statutes too. So they're all in there.
The treatise is the document that I would rely upon. Yeah. And in that document, it quotes all of the UCC, it quotes all of the statutes that the IRS, the main one, of course, is IRS Publication 1212. Yeah. That's the most important IRS tax statute out of all of them. Yeah. Is the treatment of an original issue discount and the nominee, the reference to nominees. That's the most important. If you only ever learn one thing about what we do, read IRS Publication 1212 about how it treats nominees holding debt securities, which is the negotiable instruments, and the taxes that are collected on holding debt instruments as nominee. Yeah. That is it, and that's really all you really need to really know about. All the other statutes are nice to know. That's why I don't remember them all, because they're kind of irrelevant. It's all IRS Publication 1212, nominee and redirection of taxes that the nominee is paying for the use of the credit, which is credit energy. That's really all you need to know.
Yeah, yeah. Okay, next question is the employer identification number issued to the private foreign grantor trust as an independent juridical entity, or is it attached to the individual human being?
Well, the foreign grantor trust is issued to a grantor that is foreign to the United States.
Yeah.
Now, let me explain what I mean by that. The United States, as an artificial construct, has registered citizens, residents or registered citizens, yeah? Those registered citizens are artificial constructs. If you set up a foreign grantor's trust as a citizen of the United States, your foreign grantor trust isn't going to qualify as a foreign grantor's trust.
No.
Because the citizen is operating as the grantor, and the citizen is part of the bankruptcy. So when you create a foreign grantor's trust, it's got to be created as a foreign entity that isn't controlled by a US citizen.
Yeah.
Because if it is, it will fail the control test and it will be part of the United States bankruptcy, and it doesn't work for tax redirection.
No.
So it is very important that the grantor, and you see the way that we set, people are going to say, well, how are you going to get a grantor trust for a US citizen? And the reason why you can get one for a US citizen is because you are applying for the grantor's trust for the living beneficiary of the trust,
Yes.
who is not a US citizen,
No.
is the agent for the US citizen.
Yes.
So that's how you can get a foreign grantor's trust for tax filing purposes that ticks the box of it's not being controlled within the United States bankruptcy, because the living soul is not controlled by the bankruptcy directly. Indirectly, it is through the artificial construct, because it's the agent for it. But you can get a foreign grantor's trust for the living soul that is not a citizen.
Yep.
Outside of the bankruptcy, on the private side of the ledger. The public side is the artificial construct. The private side is the living soul.
Yep.
Where the consciousness comes.
All right. Next question is to do with beneficial ownership and then the credit origin as well. It says, in commercial agreements like mortgages, who is the true lawful source of credit? Biological signature of the living individual or the bank corporation? How does being the primary source establish beneficial ownership?
Well, great question. The source of the energy is consciousness. It is coming from the living soul. The signature, an artificial construct can't sign a negotiable instrument.
No.
It needs the living soul. So the issuance of the energy is from the living soul. It's using the credentials of the birth certificate construct as a banking entity to issue the negotiable instrument, but the actual signature is always going to be the living soul, because you can't get an artificial construct to sign a bit of paper.
All right. Let's move on to section 2 then, Ian. So let's talk about a little bit more about that birth certificate myth, and then the ex nihilo mechanics as well of ex nihilo credit creation. First question is, does the theory that birth certificates are individually bonded and traded as liquid cash assets have any legal validity, or is it a misunderstanding of administrative vital statistic records?
Well, it's very confusing, and we spoke about this in more detail last week.
Yeah, we did.
People think that there is a bond with a CUSIP number that is directly connected to the birth certificate, and that bond has a traded value. That's what people want to believe, and they think that bond is a hidden secret value that belongs to them.
Yeah.
It's like, the government set up a bond based on the birth certificate. It's a Sescavav trust, which basically means the beneficiary. And the government's registered it within the banking markets with a CUSIP number, and it's got a very high value. $100 million value is quite often quoted.
Yeah.
And everything that you do on the monopoly board is tapping into that bond. So if you want to use that bond, you can use it to discharge debt, court cases, etc., etc., etc. And that's the problem with that ideology, is that show me the CUSIP number for the bond that people believe exists. And what they'll do is they'll go and look up, and there's a guy called Brad Tipton who sells this guide to how you can find your birth certificate bond.
Right.
You can go onto Fidelity, which is a financial platform.
Yeah.
You type in your birth certificate number or the social insurance number, and it comes back it finds this investment fund that does have a CUSIP number. And people say, aha, that investment fund with a CUSIP number is my birth certificate bond. Right. Or the other thing that people do is they go on the SEC's database, which is called EDGAR, EDGAR, the EDGAR database,
Yeah.
and they type in the same reference number, and it pulls up all of these CUSIP numbers of bonds, and they go, right, my birth certificate is being traded by all of these. It's being held by all of these investment funds, and that's my proof. You can actually see videos of people doing this on YouTube, and pulling it up and saying, "There's my birth certificate." It's either you can find it through Fidelity or you can find it on the EGGA database, and that one there is my birth certificate bond. Well, they're not. It's just a coincidence that they happen to have a very similar reference number to the social insurance number or the birth certificate number, because it's either one that people use. And you're just finding a tradable security that is being traded and registered under the SEC system, maybe held at Seeding Company or DTCC, the Depository Trust Company. It's just a regular traded security.
Right.
But it isn't a birth certificate. So that it's confusing, because people convince themselves that using these platforms, you can find your birth certificate bond.
Right.
So that's why I say, send me the CUSIP number of your birth certificate bond. You won't be able to do it, because there is no such thing. There's only a CUSIP number for an investment fund or an investment bond that is being traded within the financial markets, having been registered as a financial a tranche, or it references other things like in commodities or stocks and shares or some other investment asset, and it has a CUSIP number to identify itself as an investment asset. But it's not your birth certificate.
No.
It's not your birth certificate bond. And nobody ever says, here's my birth certificate CUSIP number, and it's exclusively being traded on the financial markets. All they can find is investment funds that are being traded on the investment markets. And then they say, well, my bond is part of that fund.
Right.
Well, where's the evidence? Go and get from the investment prospectus all of the instruments that the investment manager is holding, because they have an inventory of all the investments that they're holding in their bonds. And I know this because I was an investment manager.
Yeah.
If you'd asked me 20, 30 years ago, when I was managing bonds and funds, could I list all the assets that are being held under a CUSIP number? I've got to keep a record of them all. It's all audited. I don't think investment managers are going to hold birth certificates without knowing about it.
No.
So that's what I'm saying. Find me the actual CUSIP number that represents the birth certificate, and then show me the inventory of investments that the investment manager is holding, and prove to me that it's a birth certificate bond that's being held. You won't find the proof, because it doesn't exist. So that's why people get confused, because they're finding evidence. It's a bit like Sherlock Holmes is finding something with his microscope that is definitely off the scent, but it looks like it might be the proof. Later in the show, he realizes that was a red herring. It looked very credible, but then he realizes it's not got any credibility. But at the beginning of the movie about Sherlock Holmes, he thinks this is the evidence, and then he changes his mind when he can't triangulate it, and it doesn't make any sense.
Okay, well, let's have another bit of triangulation then, because we've got another question about the birth certificate to do with the actual paper that they're printed on. Why are certified copies of birth certificates issued on specialized security bond paper if they do not carry direct cash redemption value?
Again, it's a coincidence. It's that certificates are printed on paper that is appropriate for a certificate. If you print a certificate on a regular piece of office paper, for example, it's too thin. So they print it on thicker paper because it's a certificate. You might want to put it on your wall. You might want to put it in a frame, and you don't want it to be too thin. This myth about it's a bond because of the paper.
Mm.
It just happens to be certificate paper.
Yeah.
If I used to run athletics. I used to get certificates to win a race. It's just a bit of thicker paper.
I know.
That's all it is.
Our envoy certificates are printed on bond paper. They're printed on lined bond paper. They don't have a cash value to them. It's the appropriate substrate to print those types of things onto. It's just coincidence.
It's a protocol for certificates to be printed on slightly thicker paper.
Yeah.
Because you might want to store them a long time, so they don't, they don't disintegrate as easily as a thin bit of paper. You might put it in a frame. You don't want to look through it. It can't be transparent. It's got to be a bit thicker paper. That's all it is.
Yeah. And if it has a watermark to it, those things are added in there just for added value to make it look more authentic. It doesn't mean it has an actual security or cash value to it. Okay, let's move on then, Ian. When minors and young adults open basic bank accounts without a guarantor, does that commercial transaction create a negotiable security on the bank's back-end ledger?
No. And that's because they haven't come of age yet.
Yeah.
They are minor in the system. Although it's only when they get a social insurance number can they issue negotiable instruments, because this is where people are getting confused again. You see, the social insurance number is tracking the negotiable instruments that have been issued by the signature, the living soul operating through the banking entity, the birth certificate construct, that then issues the negotiable instruments. All of those instruments are linked to the social insurance number.
Yeah.
That's how they track it. So the IRS has got this IRMF database that's tracking all of the instruments that have been issued, referencing the social insurance number to track them all. That's your track and trace. That's the social insurance number.
Yeah.
And the way to look at this is this, right? Why would the state issue a birth certificate bond worth $100 million to somebody who does not play very much Monopoly?
Yeah.
If you imagine there's however many billion people there are in the world, you add the numbers up and then say, right, let's give every one of them who's over the age of 18 $100 million bond.
Yeah.
Backed by the full faith and credit of the United States. Add all that up. You're talking, you wouldn't even be able to put the numbers on your screen.
No, you wouldn't.
There's no calculator that's ever been invented. It's got enough digits to be able to record that. So why would they do that? Or wouldn't it be better to record what is actually issued into the Monopoly Board system through the signature? And then all of that is income that you've provided to the banks, which gives the banks the ability to use that income that you've deposited with them for their purposes in their game.
Yeah.
And now you've got someone who's prolific, who might issue $100 million of financial instruments over their lifetime, or maybe more, compared to the guy who doesn't play Monopoly hardly ever. He's got a very, very low-key private lifestyle, might live in a cabin in the woods.
Yeah.
Who knows?
He's off-grid.
Why is that guy in $100 million bond? Whereas the other guy, who's playing Monopoly at the highest level, knocking himself out with all sorts of things on the Monopoly board, the two are completely unique, aren't they? To the user. They're unique to whoever's using the signature. So that's how they developed it. The more you do, the more credit you've issued out into the system, the more economic activity you put in. That's in reverse how they program you to be more proactive on the Monopoly board. Do more, have more.
Yeah.
become more of a slave without realizing it, because you actually think that you're doing really well because you've got all this stuff that you've accumulated. And so they don't need to issue bonds. They just need to track what you're issuing, your deposits you're making through the signature credit energy. That's all they need to track. And then they've given you the pathway to redirect the taxes on it, as opposed to cashing in this mythical bond. You know, let's have a look at the rainbow. Has anybody ever found that pot of gold at the end of the rainbow? Every time you get near it, the rainbow moves, doesn't it?
Exactly. I haven't seen the leprechaun yet, not once.
No.
Right, let's move on. How does a 98 series foreign grantor trust, acting as holder in due course under Section 20 of the Bills of Exchange Act 1882, how does it legally fill up the instrument originally generated by a commercial bank?
It's an amazingly intelligent question, because if you can't fill the instrument up, as the foreign grantor trust can't take it for value, then it can't redirect the taxes. So what's happening is, and this we're going to touch on this towards the end of this session about what I'm talking about on this weekend. I won't give it all away here. But basically, when you make the deposit, you are depositing energy into the system. You make the deposit, sign, the signature. It doesn't have to be a physical signature. It's a digital signature. But it would have been originally a signed contract of some nature would have been used to have created the account, whether it's a bank account, a mortgage account, a credit card account, a lease account, something. There's somewhere along the way the signature would have been used. Even if it was a digital signature, it's still being used to create that contractual obligation of the deposit of the energy that goes on to the monopoly board, the bank operating as the nominee, creating the matching liability, because you're depositing an asset and they're creating a matching liability, which is where the signature credit originates from. So when you look at the filling up, the Foreign Grantors Trust has identified the CUSIP number of the security that is yet to be filled up. Because the banks don't fill it up. They want it to remain negotiable. Let's talk about what that means, right? Other people won't realize that the reason why they're called negotiable instruments is because they are issued out in negotiable form, but there has to be a negotiation to fill them up. The Foreign Grantors Trust, identifying the security with its CUSIP number and the taxpayer that's holding it, negotiates it, takes it for value, unencumbered, without adverse claim, and fills it up because it negotiates it, completes the negotiation by filing 1099 OID. Up until that point, it is a negotiable instrument that hasn't been negotiated.
And that's how the banks would like them to stay.
So I promise to pay in the future is an open-ended promise,
Exactly.
It doesn't say in 25 days' time, I will pay you.
No.
So I issue my promise to pay in the future that can be negotiated when it's collected upon. The Foreign Grantors Trust is closing the loop, negotiating the instrument that then fills it up without adverse claim and by quoting its unique reference number, which is the CUSIP number, and identify who is holding it as nominee, which is the taxpayer, the bank. And you can't do that. You can't negotiate a negotiable instrument, i.e. fill it up, if you're a debtor?
No.
Because you have no standing to negotiate it.
No.
You can't become the holder in due course as a debtor. You can only become the holder in due course as the creditor, which is the foreign grantor's trust. And why is it a creditor? It's because it's outside of the United States bankruptcy. It operates outside of the bankruptcy, so it can operate as a creditor. If it was in the bankruptcy, it could only ever be a debtor. Because everything that's in the bankruptcy, registered in the bankruptcy, is going to be a debtor by definition.
Yeah. Okay, we're getting some really good questions today, which is great. Okay, let's have a look here. So this one, another good question. How did the financial system transition society from individuals holding legal title over their assets to living people just merely holding equitable title over mortgaged assets?
Again, really good question. It coincides with money of account coming in. So if you want to run a money of account system, there has to be some substance somewhere, right?
Yeah.
Otherwise, it's just bits of paper, computer ledgers, nothing backing anything. So if you are going to run a money of account system, there has to be some collateral somewhere to be able to run a money of account system.
Yeah.
When you look at it says the full faith and credit of the United States.
Mm-hmm.
That's what people say, oh, what's fiat currency backed by? Well, it's backed by the full faith and credit of the United States, right? Well, what are they backing it with?
Mm-hmm.
They're backing it with the collateral that they basically pledged to the bankruptcy trust, but the bankruptcy creditors, which is the original bloodline banking families. So the full faith and credit of the United States relies upon the collateral that is registered to the state being held as collateral of the bankruptcy.
Yeah.
To underpin the bankruptcy. When you work it out, right? Every time somebody buys a house, a car, a business, or whatever, there is a collateral value to that thing, yeah?
Yeah.
They invest in cryptocurrency, they invest in stocks, shares, bonds, commodities, whatever it might be, right? Precious metal, land, whatever it is. If it's registered, it has a value, yeah?
Yeah.
And it's being financed with new credit, yeah?
Yeah.
Or existing credit in the ledger. So all that collateral is registered as collateral of the bankruptcy. So as the bankruptcy expands, dollar for dollar, it's matched by the collateral that is being acquired with the credit.
Yeah.
All of it being offered up to the original bankruptcy creditors, managed by the trustee, which is the United States Treasury. So if you go back 100 years, there might have been 500 billion of assets offered up as collateral for the bankruptcy. Now it's probably hundreds of trillions of assets, because the expansion of all that, the value of the dollar has gone down, but the collateral value is the same, but pretty much the same collateral that's being traded, with some exceptions. So the original creditors figured that out. They basically own everything.
Yeah.
And anything that is going to be created in the future, they've already got a lien over it. They've already got the lien over it because it's registered into the bankruptcy. And that's why it's a permanent bankruptcy. You can't get out of it. The United States can't say, well, I tell you what, we'll settle the creditors and get out of bankruptcy. Then the whole money of account system comes to an end.
Yeah.
They want it to be in bankruptcy so they can carry on with the money of account system.
Yeah. All right. Let's move on to section 3. And then what we'll do is we'll also see if we can address some of the questions that we're getting in the chat, because we're getting some questions in the chat from the webinar as well. So recoupment calculation rules, credit cards, the 2 million annual cap. Let's talk a little bit about this. If an individual underestimates or overestimates bank payments in their recoupment calculations, does the IRS system detect that discrepancy? And could an overestimation trigger an audit or processing delay?
Again, a very, very good question. No, the answer is no, because the IRS system, their IRMF database, looks at the amount of tax redirection, that's the 1099 face value. So let's just say it's $1 million for easy numbers.
Yeah.
So the 1099 OID is filed and says there's $1 million of backup withholding taxes that I am now reporting that belong to the foreign grantor's trust. Because that's what the 1099 OID is effectively doing.
Yeah.
Filling up $1 million, referencing the CUSIP number of the security, where the taxes were paid by whoever has that security registered, the legal title of the security registered to whichever bank it is, right, that's paid the taxes. So the IRMF system is going to look and say, right, how much taxes has the taxpayer that is responsible for this CUSIP number security paid us? Oh, they paid us 10 million. And this 1099 OID is for $1 million.
Yep.
It goes through the system. Because the algorithm won't know that within that $1 million that the 1099 OID is filing for is 20 years of bank statements or bank accounts.
No.
It won't go down to that granular level. It will just say, how much is the 1099 face value? It's $1 million. How much taxes has the taxpayer paid at 10 million? The 10 million is greater than the million. We'll let that one through.
Yep. Yep. Okay. Moving on. Compounding interest. Do accumulated interest payments and bank charges add to the original face value amount when calculating signature credit recoupment?
Yeah, I mean, bank charges are basically, they're set off against deposits that you're making, aren't they? So
yeah,
you put $1 million in your bank account and they charge you $10,000 a year for bank charges. You still put $1 million in your bank account.
Yeah.
So it's all set. One is set against the other, really. And what you're doing is you're looking to recoup or redirect taxes on the million.
Yeah.
It's what's leaving your account. Yeah. So as we've said many times, so bank charges are effectively leaving your account. Well, in the money of account system, they might not go to anybody other than the bank, but they're still leaving your account.
Your bank account, because you're paying those charges. Yeah, exactly. And on screen or on paper, it effectively looks like your bank balance has gone down by that amount. So, okay,
it's a deduction from your account.
Yeah,
which is the bank's keeping it.
Yeah,
and they only do. By the way, they only do that to make it look good. They don't need you to pay bank fees. Have you ever wondered? I mean, no one's ever asked this question, but I'll ask it because I think it's.
I know what your question's going to be, but go on.
Right. Why do banks offer current bank accounts without charges? How many people have got a current bank account or a checking account if you're in the United States?
Yeah.
And why don't the banks say to you, hey, it's going to cost you $50 a month for us to provide you a checking account? I wonder why. Is it possible that they might be making a huge amount off your checking account?
Yep.
And some banks actually offer a reward. I was listening to an advert. I can't remember where it was, but it was at one of the banks in the UK offering £100 or £200 to open a bank account with them.
Yeah, they do that now. have all these
Yeah.
reward schemes attached to the supermarkets and goodness knows what else, where you can get money off
Yeah.
your groceries and discounts off of this if you have your bank account with us. They're making it more and more and more attractive.
So if you were going to run a business and you're going to offer millions of bank accounts to your customers, and you're never going to charge them anything, and you're going to give them £100 to open the account, and they're not doing anything other than just using a checking account.
Yeah.
How long would you last for? How long would your business last?
Yeah, not very long.
So they must be making money somewhere else. Yeah.
Yeah.
Aha. Maybe they're using those deposits as income. Maybe they're selling those deposits as securities to the investment banks and making in the back end of the arrangement, in the hidden part of the arrangement that you don't get to see.
Yeah, exactly. All right, so that's that one. Let's talk about credit card calculation method. When calculating credit card recoupment from age 18, should filers use the static face value credit limit or the cumulative sum of monthly payments made over the life of the account?
Great question. It's the limit. It's like you can go and get a mortgage and it says, right, and people have had lots of these, you know, I had one years ago. I had a house built. So you go and get a mortgage for, again, $1 million, but you might not draw it all down in the first tranche because you're building a house.
Yeah.
But the mortgage is still $1 million. Yeah. The credit card, it says you can have, you know, a $20,000 limit or a £10,000 limit. If your score is high enough, you can get a limit like that, or maybe more. Well, that's what you are putting down. It's not that you spent, you know, money here, there, and everywhere. It's what your limit is what you are putting down.
Yeah. Yeah.
And then if you're making bank payments to your credit card,
yeah,
to discharge the credit card balance, you're already claiming those under your bank payments. Yeah. So you get, if you've used your credit card for 20 years and you've spent $1 million on your credit card, but your limit was only 50,000, you're getting that million because you're redirecting the taxes on your bank payments.
Yeah, exactly. So a short answer to that question is it's both, actually. It's the face value of the credit limit, and then through your bank redirection, your tax redirection on your bank accounts, it's the monthly payments that you're making as well.
Yes, payments made to the credit card to discharge debt, allegedly, and it's the face value of the credit cards.
Of the credit card when you took it out. Yeah. Okay. So next question, Ian, is to do with the annual safe harbor cap to 2 million. Why is individual signature credit recoupment strictly capped at 2 million per grantor trust per annum if signature credit is produced on an infinite level on the bank's ledger?
I think it's a really intelligent question that indicates and vindicates what we're doing. It indicates that what we're doing has credibility, because if it had no credibility, why would there be a cap?
Yeah.
You wouldn't need to come up with a policy if you were the IRS. The reason why there's a cap, in my opinion, I don't know this for sure, but it makes sense to me, that because you don't want people to figure this out, right? But some people do. You don't want people going around making $100 million claims on tax redirection.
No.
So the 2 million a year, it still keeps it reasonably under their control, right? Because let's say that the one in a billion or 1 in a million, depending on how you look at it, figures this out. If they all could go round redirecting everything that they have ever created on the Monopoly board in one go, some of them really heavy hitters, like mine would be extraordinarily high amount because of all the things I've done in my career. You don't want to be able to give out a tax redirection that is so high that it's going to destabilize their control system. All in one. If you had 1 million people all claiming 100 million in one go,
Yeah.
in 1 year, to destabilise their system.
Yeah. Yeah.
So I believe that they've limited the amount to 2 million because they deem it to be a reasonable amount of tax redirection.
Yeah.
That still keeps the system operating without people going crazy.
Yeah. Yeah.
That's what I believe it is.
Yeah.
Otherwise, why have a limit?
Yeah. So it's partly control, but like you said, it's also validation as well, which is good.
Yeah.
Okay.
Now, it doesn't mean to say that if you wanted to claim more than that, you couldn't. It's just that we don't want to do it.
No.
You could do this on your own, and you could try and redirect a lot more than 2 million, and you could go into negotiations with the Joint Committee on Taxation, and you could try and prove to them that you have an entitlement to this tax redirection, and you'd probably win. But they would keep you in negotiation for at least a year, I reckon, maybe longer.
Yeah.
And you might have to take them to court.
Yeah.
So, that's why we don't want to do it, because we don't want to have lots of cases like that.
No, absolutely not. Not when we're trying to build the freedom plan. I get that. We don't want to be hanging around waiting and wading through court cases forever and a day. So, okay. Bank checks and payment events. Is writing a paper check or executing a digital transfer from a commercial account classified as a bank payment for historical recoupment calculations?
Well, writing a check that's uncashed wouldn't qualify, but if it's cashed, then it qualifies.
It's cashed, the money's moved, isn't it? Yeah.
Yeah, because it's left your account.
Yeah.
The mechanics of it leaving your account was a check, or a digital transfer, but it has to leave your account for it to be included in the tax redirection.
Okay. Let me quickly go to the chats. We've had a couple of questions here as well. One here is, in fact, I'm going to leave this question until we get to section 6. So I'm not going to ask it just yet, because it really falls in line with what we've got in section 6. Let me just see if there's any other questions here. That was the main one. And we've had a comment about that. Interesting to think about a checkbook. Every time you sign your name on a check, negotiable instrument, the bank would love it to have high values on that check. So they can on-sell it. Well, they're on-selling the instruments anyway, aren't they? Regardless. When the money moves, the money moves.
Only when it's left your account and they sell the instrument.
Yeah, yeah. Right, let's move on, Ian, to the next section then. So section 4. And the questions we've got here are, firstly, establishing the 98 series trust. What is the administrative procedure to acquire a 98 foreign grantor trust and then correct a person's legal capacity?
So you have to fill in what's called an SS4, which is an application that goes to one of the specialist tax offices. There's only 3. The IRS have got offices all over the United States. There's only 3 that issue the foreign grantor trust. The main one being Cincinnati. That's where the main foreign grantor trust unit is. You have to complete the SS4. You have to be able to know how to fill it in, because it's a multi-purpose SS4 form, and you need to know how to answer the questions so that it doesn't flag up and you could end up with a domestic trust if you're not careful.
Yeah.
And then you have to have a trust indenture. So you need to have a trust indenture, you need a trustee, you need a foreign address for your trust, because your trust is outside of the United States. So you have to have an address. You can't just say it's a foreign trust, because you have to tell the IRS what address is the trust registered at. So it has to be foreign to the United States. You have to have a grantor. You don't have to tell the IRS who the beneficiaries are.
No.
But you do need to tell them who the grantor is, or the name of the grantor.
Yeah. And
you have to justify that it's outside the United States, hence the address. outside, and you definitely don't ever want to put an SSN number down,
No,
or an ITID number
that
down,
won't work.
or
No.
any other number that recognises it to be set up by the artificial entity of the birth certificate entity.
Yeah. All right. So in line with that, once that's done, what specific international banking institutions are utilized to receive and clear treasury recoupment disbursements for trust accounts?
Yeah, it's a great question. It's not actually international banks that are going to clear. They have to have access to the Federal Reserve System, because the Treasury and the Federal Reserve work very closely together. So when the Treasury under TRIAS 310 issues the FedWire or the ACH, the bank that's going to receive that has to be part of the Federal Reserve System.
Yeah.
So the trust opens an account. Well, it's not the trust opening an account, it's MLITR Research that opens an account as a master account for all of the foreign grantor trusts. That it is operating as attorney in fact.
Yeah.
So it's one account with lots of sub accounts, it's just ledgers really, that receives, and that account has to be part of the Federal Reserve System. You have to clear in the Federal Reserve. The IRS won't send a TRIAS 310 to a bank in Switzerland that isn't part of the Federal Reserve.
No. Okay.
And there is a reason for that. Because the tax redirection is part of the United States bankruptcy.
Yeah.
So all the banks that are registered within the Federal Reserve System are all part of the United States bankruptcy.
Okay. Let's look at the next question, which is to do with pooling trusts, multi-trust asset pooling and donations. Can multiple family members or clients transfer recouped funds between separate foreign grantor trusts to purchase high-value assets like real estate?
Yeah, in theory, you could do that. You could set up 10 independent foreign grantor trusts, and they could, in fact, make deposits between themselves, between all 10, to increase the amount of the tax redirection that the collective 10 could redirect. Yeah, could do that. Yep. So if you set up 10 foreign grantor trusts, 10 separate grantors, 10 trusts, and then you had transactions going in between the grantor trusts, that would increase the amount of signature credit tax redirection for the 10 trusts. Yep. You could do it like that. If you were looking to finance a particular project, I think I mentioned this on one of our interviews. If you wanted to finance a project,
rather than getting people to invest the capital up front, then, well, you continue in, but I know we talked about it.
Yeah, I mean, if you want to raise $50 million to finance a project, you can go out into the market and say, hey, why don't you invest in my project? And then you're going to be competing with every other project that's looking for financing. It's very difficult to raise the money. I've got the T-shirt. I ran a financing platform for 3 years, so I know how difficult it is for people. People used to queue up around the block to get funding because it's really, really difficult. You've got cryptocurrency platforms that now promise that you can raise funding through the blockchain and get investors to come in and buy tokens. It's called tokenization. Yeah. It's kind of a digital version of what used to be called IPOs, initial public offerings, back in the years gone by. But it's very difficult because there's loads of people trying to raise money. Or you could go to your investors and say, hey, why don't we set up a foreign grantors trust for you? You redirect taxes that are due your bank payments, your mortgages, your credit cards, your loans. As long as you make a subscription to my investment when you get your tax redirection, and if you did that with 20 people, 25 people, then there's your 50 million. Yeah?
Yeah.
So the very first investment that these people are going to make is from their foreign grantors trust. That finances your project, and of course they can redirect the taxes the following year equal to the investment. So they've not actually taken any risk at all, and they funded your investment program.
No.
And I actually wrote a paper on this because I don't think people have realised that if you're trying to raise money, the biggest problem you've got is people don't want to risk losing their money. Exactly. So you give them a solution. Okay, you don't get the funding for 6 to 9 months, but you might not get it anyway. You might not get it at all if you're trying to go down the conventional capital raising route. It's quite difficult to raise large amounts of money.
Yeah.
Because nobody wants to lose their money. Yeah. So you give them an option where they don't have to lose anything because they're just redirecting taxes that they didn't know they had.
That they didn't know they had, and then they'll get them the following year anyway. Yeah. So everybody wins in that scenario, which is a great option for people that are wanting to build projects out or have specific things in mind like that. Okay. Business debt and personal guarantees. Can the signature credit protocol be applied to discharge commercial business loans or debt that an individual personally guaranteed?
Not a guarantee because there's no actual transaction, but the actual debt itself. Yeah, if there's a commercial, commercial credit line that was set up to finance something, it's still the signature that created it. So it doesn't matter that it was called a XYZ commercial loan or whatever they call it. It still was created from the signature.
Okay. Is it possible to structure corporate loans outside the 2 million annual tax redirection cap to generate cash flow or acquire tangible assets?
Well, only in the way of, we've just been through in the last question, really. You get a collective of people who are doing tax redirection and use their first redirection to invest in a project. That's the most elegant solution that I can think of. You can't, the 2 million limit is per grantor. You can't create a grantor's trust for a company and then have another 2 million.
No. We have that question as well. Okay. So when recouping funds are dispersed into a private treasury, how does a member acquire real estate or vehicles without getting re-trapped in the public commercial grid?
So you've got, let's imagine that you've got $2 million sitting in your foreign grantor's trust, your private treasury. You've got a bank account and you want to go and acquire some property.
Yeah.
You go to the agent selling the property and you say, I'm a cash buyer. My funds are in my trust.
Yeah.
Here they are. You can see them. They're sitting there. If you want to do due diligence on my trust, my foreign grantor's trust, here's my ID pack. And I'm a cash buyer and my trust is going to acquire this property.
Yeah.
And it does. And then if the property can be moved into the trust, if it can be recorded in the trust as opposed to registered back into the bankruptcy, which is be difficult because it depends on what you're trying to buy. But if you can get the fee simple title on the property, now you can move the property into the foreign grantor's trust.
Yeah.
And you can hold the fee simple title on it, and then it's not part of the bankruptcy.
No.
You can do that with gold. You can do that with silver. You can do that with fine art. You can do that with land that isn't already registered.
Yeah.
So that it makes it impossible to get the fee simple title.
Yeah.
You can do it with anything that you can get the fee simple title on. And in my opinion, the best asset to have in a foreign grantor's trust is gold and silver.
Yeah, definitely. All right, let's move on to the next section then. We are now on section number 5. So we're taking a bit of a shift now. We're going to talk about the mortgage side of things, the mortgage discharge protocol, adverse claim, legal action. What are the exact steps and costs involved to initiate the mortgage discharge protocol? And is it separate from the 2 million annual bank recoupment cap?
So it's a different process.
Yeah.
But there is a crossover in that in order for it to work, you have to create a foreign grantors trust
Yeah.
that files 1099 OID against the mortgage security to negotiate the mortgage security, to fill it up, as we were saying earlier on in the interview or in the Q&A. So let's give you an example. I keep on using $1 million, so I'll carry on with my $1 million mortgage.
Yep.
$1 million mortgage, and you want to discharge it. What are you going to do? Well, the first thing you're going to do is make sure that the mortgage itself is being traded or held within a nominee arrangement. So we would run a mortgage securitization report on the mortgage, just in case it's something quirky about it and it was never securitized, which would be very unusual. But there are some examples of that where mortgages were created in the conventional way, where there actually was a loan of real money, like there was a substance loan made. That doesn't happen very often. Most mortgages are securitized. So we need to know the mortgage provider name, we need to know the face value, we need to know the year, and then we can run a securitization report, which will track down where that mortgage is being held. The mortgage note, it's going to be held almost certainly in a tranche somewhere in the United States system at probably Seed and Company, under a street name, that an investment bank, one of the big investment banks, is going to be operating as the indentured trustee for that particular mortgage. Okay. So if our securitization report can find it, now what you can do is you can create the foreign grantors trust, which could be the same foreign grantors trust that you're going to use for filing tax redirection on bank payments and other mortgages, credit cards and loans. It doesn't have to be unique foreign grantors trust. It just has to be a foreign grantors trust. And then you're going to file 1099 OID. Say you are going to do it. Our tax preparer is going to file 1099 OID and fill up the instrument. Negotiate the negotiable instrument that is currently held by the indentured trustee, which has never been filled up before because they're holding it as nominee. It's never been negotiated before because they're holding it as nominee. They don't want to negotiate it. They want to keep on using it. So then what happens is an adverse claim is issued by the foreign grantors trust to the indentured trustee that they're holding a security that basically has been discharged by the foreign grantors trust. There is a claim, an adverse claim over the security that is being held currently. The indentured trustee believes that that security belongs to their investment tranche, their mortgage security, mortgage-backed security pool, right? So you file an adverse claim to the indentured trustee. The foreign grantor trust filing an adverse claim because it's the one has negotiated the instrument, has filled it up, discharged the mortgage, Then the beneficiary of the foreign grantors trust, the living soul, effectively, is going to take up a separate claim at the Southern District of New York. That it, as a beneficiary of the foreign grantors trust, has a claim because it provided the signature
in the first place.
It created the mortgage in the first place. So the foreign grantor's trust is not making a claim in the Southern District of New York. The beneficiary in equity is making the claim because it's saying, look, I have skin in the game here. It's my signature that created the mortgage that's still being held by the indentured trustee. So you've got the foreign grantor's trust adverse claim, and then you've got a claim from the provider of the signature credit energy
as well.
And that is the claim that gets filed at the Southern District of New York.
Right.
That is going to come with an affidavit from the tax preparer that says that the tax preparer has filed 1099 and filled up the negotiable instrument, and there's an adverse claim against the indentured trustee, and that the indentured trustee is now in breach of the Indentured Trustee Act of 1939.
Right.
Because they're holding a security that's been discharged.
Yeah. Yeah.
And they have to give it up. Because it ain't theirs anymore, and it never was theirs in the first place.
No.
Because they were ever a nominee, and the evidence of them being a nominee is that they paid taxes on their 945 tax module as a nominee. They paid backup withholding taxes as nominee on the mortgage.
Okay. Let me have a look.
They might fight all the way, and they might fight to the death, the indentured trustee, or they might privately settle.
Yeah. Private settlement would be better, I think, from their point of view.
If you game theory it out, if the mortgage is of an average value, $200,000-$300,000, that sort of level, maybe $500,000, the indentured trustee is going to have to employ a law firm, some pretty heavyweight lawyers who are going to fight on behalf of the indentured trustee that is holding hundreds of thousands of mortgages that it cannot afford to lose one case.
No, because that sets the precedent, doesn't it?
Because it sets the precedent. So they're going to be spending hundreds of thousands of dollars with a New York high-profile law firm that would even understand anything about this subject. So after a while, it becomes very expensive for them to defend.
Yeah. Would it not make more sense just to do a private settlement? That's the way that I would think about that. Yeah, for sure. Okay.
That's what we're aiming at. We don't want to bring down the whole mortgage market.
No.
We just want to get the indentured trustees to privately sell.
Yeah, remedy for the members. That's all we're looking for. Okay. So if the adverse claim filing is the adverse claim filing used strictly for real property mortgage disputes, or does it apply to general credit recoupment?
It applies to the foreign grantor's trust that has negotiated the mortgage instrument and filled it up.
Yeah.
And that mortgage instrument is being discharged whilst it's simultaneously being held as collateral in a tranche with by an investment bank who are holding legal title over something as nominee that is already being discharged.
Right.
So the adverse claim is saying, hey, it's like saying, in my marbles bag, you've got 100 marbles, right? So the bank's holding a marbles bag with 100 marbles in it.
Yeah.
And you say, well, actually, one of those marbles is over here now. You've only got 99 in your bag.
Yeah.
You haven't got 100 marbles in your bag. You've got 99. But you claim you've got 100. We took one of those marbles out of your bag. It's over here in the foreign grantor's trust. It's gone from your bag.
Yeah.
But the indentured trustee still claims they've got 100 when they haven't.
Yeah. Yeah. Okay. So in terms of discharge then on a mortgage, if a member uses recouped funds, let's say, to secure a new property, and they get a mortgage to do that. So member uses recouped funds to secure a new property mortgage. Can the mortgage discharge protocol be executed immediately to clear that new charge?
Yeah, I mean, in theory, you could go out and get a mortgage, and then you could instantly create maybe you've already got your foreign grantors trust. You could file 1099 OID against it as soon as it's been securitized.
Yeah.
Because we need to find where it's been sold to.
Yeah.
So you couldn't do it on the day you signed up for the mortgage, because the banks that provide the mortgages tend to securitize them within the first 3 months.
Mm-hmm.
So you'd have to wait for probably 2 to 3 months.
Yeah.
Then we would find out where the mortgage, where it's being securitized, and then you could go through the process I've just described, do the adverse claim, redirect the taxes.
Yeah.
So yeah, you could do that. There's nothing stopping you doing that at all.
And if you've been through recoupment, then would it not be easier just to, like we mentioned earlier, just buy the property through the trust and then recoup that the following year, rather than taking out a mortgage and going through the adverse claim process?
You could do either one. I mean, you could take the funds from your foreign grantors trust, go and buy with cash, a cash buyer, and then that purchase is a deposit. You've made another deposit, you've issued a negotiable and recoup that the following year, or you go and get a mortgage and go through the adverse claim and the mortgage. The mortgage route is more complex.
Yeah.
You're going to get involved in a claim in the Southern District of New York. So you are going to be involved in that, and you're driving it. We're not doing the claim for you.
No,
we're not running the lawsuit for you. We're just going to give you the tools to do it. But we're not doing it. We're not acting as your lawyers or claims managers or anything like that. We're just going to give you the tools. So you are going to be involved in a process which you'll have to pay attention to it, because you can't sort of just put it down and come back to it when you fancy it. You're going to have to be involved in it.
No, there's going to be deadlines and timelines for submission. There's going to be some technical stuff in there that they're going to need to wrap their head around, isn't there? And so
I mean, you're using us as your technical research resource, but you have to sign things and file things, and even though we can facilitate a lot of that for you, you're still you driving the bus. We can show you how to do it all, but you need to do it.
Okay. So last question under section 5 is to do with litigation. Has the mortgage discharge protocol been successfully tested and recognized in formal court proceedings?
Yes and no. It depends on what people mean by recognized. So has an adverse claim ever won in a courtroom? Yes, lots of times.
Yeah.
There's lots of examples of adverse claims winning in courtrooms. Has the precise mortgage discharge protocol, is there a judgment that I could say, go and look at that judgment over there?
Yeah.
And that is exactly what you can do, and you can rely on that case precedent? The answer is no.
No.
There are cases in the Southern District of New York right now
that
are waiting for the indentured trustees to defend the adverse claim.
Yeah.
That have yet to complete. And it's my opinion that they will not want to run the risk of a decision going against them, which will set a precedent.
No.
So it's my opinion that they will want to settle as they have done in the past, which you then can't find the private settlement because it's a private settlement.
Yeah. Okay. Well, let's move on to section number 6 then. Let me just pull this up, which is to do with the protocols themselves, processing timelines, etc., etc. First question, based on historical master file processing, what is the exact time frames? Here we go again. the exact time frame, Ian, which I know we can't give, to receive physical treasury disbursements after a 1099 OID is accepted by the IRS gateway?
Well, it should happen within 9 months.
Yeah.
It could happen within 6 months. I have seen it happen in 3 months.
Yeah. But there's no exact
It all
timeline.
depends. Everyone is different, and there's so many moving parts that can delay it.
Yeah.
That you can't be precise.
Yeah.
It's not McDonald's where you go and order your Big Mac, and
Yeah.
with it, they'll guarantee within 2 minutes you're going to have it in your hand.
Yeah.
It doesn't work like that.
No, it doesn't. It doesn't. Yes, there's a format to this, but there are, like you said, there's so many moving parts, many of which we don't have control over. You know, we've spoken about this before. Issuance of EIN numbers, we don't have control over that. Acceptances of SS4s, we don't have control over that. You know, we're reliant on the IRS, and the IRS are not that efficient, in all honesty. So
you've got the EIN issuance, as you said, that can every one of them takes a different time frame, right? There are no two identical EIN issuance processes.
No.
They're all different.
I've seen them come in a couple of weeks. I think my wife Kirsty's has taken about 4 or 5 months because they got it wrong 4 times.
Yeah, so every one of them is different, right? But once you've got it, you've now got something really valuable. You've got a foreign grantors trust that's been set up outside the bankruptcy. It can file tax returns for you every year. So it's not just one, you don't have to get a new one every year. So once you've got one, now you can use that same foreign grantors trust every year going forward. So that can delay things. Then you've got the IRS processing the 1099 OID. Now they take all different lengths of time for doing that. They're not going to guarantee that they're going to process it and record it on their IRMF system, wages and tax transcript. There's no guarantee. There's no service standard where you can say, hey, you're overdue, get on with it, because otherwise there's penalties. They're going to issue that wages and tax transcript when they're ready to do so. Then you've got the cross-modular transfer. So you've got to move potentially funds from the other tax module onto the 945 tax module. So you've got that as well. Then you've got Trias 310, where, again, you can't say to the IRS, hey, my 1041 for my trust was filed 3 weeks ago and you haven't sent the funds yet, because there's no service standard on how long that's going to take either.
No. So we are really governed by the IRS on this. And like you've said, there's no standard timelines from them. They'll give you a window, and it's a very, very broad window on many of these things. So
if you walked into a law firm and said, I want to sue these people over here, and my case is nailed on, right? It's absolutely nailed on. How long is it going to take to get my win? You know what the law firm's going to tell you? We don't know.
No, because they won't.
This can happen, that can happen, that can happen. Anything can happen along the way. But then your next question is, how confident are you going to win for me? Oh, we're very confident of that. We've looked at your case. But we can't tell you how long it's going to take.
No.
Because there's so many variables that can come along that are going to delay it or indeed speed it up.
Yeah.
You've got to look at it like that. There isn't. It's not like the IRS doesn't give you compensation if they miss a deadline. They don't work like that.
No. They might be asking you for it if you miss one, but not the other way around.
Around the other way, of course, if you don't file your returns within their framework, their time framework, they're going to fine you. But around the other way, unfortunately, we have to rely upon their system. And, as much as we don't want to be beholden to them, and they're the creditors for the bankruptcy and they're working for the creditors, they still have their foibles and their processes, and we have to go along with them.
Yeah. Okay, while we're on this subject then about timelines and just the processing side of things, we have had a question that's come in the chat, Ian. Just to clarify, a female had all her accounts under a specific name, birth certificate, family name, then got married, changed names. What evidences are required to facilitate the recoupment of her funds as original family name and then another family name, married family name? Does she need 2 or 3 or even 4 more different foreign grantor trusts for every changed family name, depending on how many husbands she outlived?
Well, there's only ever going to be one grantor, right? So that's the current name that you're using. So you get married 10 times, and you take the name of the married name. That name, think of it like a company. It was first created 25 years ago, and within the last 25 years, it changed its name 10 times. Is it still the same company? Yes.
Yep.
Does it still have the same reference number as a company? Yes.
Mm-hmm.
Is the agent for the company, the director, is it the same? Yeah, it's the same. It's just changed its name.
Yeah.
So when you get a foreign grantors trust in the name that you're currently using, the IRS know. They know everything on their IRMS system. They know they know all the names. Go all the way back to the birth certificate. They know all those names. How do they know those names? Well, because they know the social insurance number, don't they? And you can have a social insurance number all your life, and you get married 100 times. You still have the same social insurance number.
I hope that answers that question for that individual. We have had other questions come through, but I think we've actually answered those through the course of the questions that we've had here as well. I'm just trying to make sure that we've covered everybody there. One question here is, if the foreign grantor trust receives money from other than recoupments, would that raise questions?
If it received money from other, what?
From something other than recoupment, other than Trias 310, would that raise questions? No.
It's not about what's coming in, it's about what's going out. So the foreign grantor trust might receive, you might want to, for some reason, put funds in there. You might want to transfer funds into it. This is your private treasury. And then you want to spend them. Well, that's no different from spending your funds now. Your birth certificate, bank account, linked bank account, whatever that name the account is. You might want to put funds in it, spend them. It's what goes out of the account which is going to set up the tax redirection, the value of the tax redirection.
Yeah. Okay, perfect. I think that's answered them all in the chat. Yes, it has. Okay, so we've covered timelines, we've covered that. All right, let's move on. 2025 sabotage. What is the current status of the tax credit filings that experienced the administrative holds following the 2025 credentials sabotage?
Unfortunately, they were all cancelled.
Yeah.
Not by us, by the saboteurs. Ultimately, the saboteurs cancelled everything, and there's nothing we could do. We tried to revive them all.
Yeah.
We weren't able to do that. There was a period a few months ago where I thought we might have been able to revive them, but we weren't able to do it. So unfortunately, they were all cancelled. Just sending a message to somebody's calling me. And there's nothing we can do apart from refile, which is what we have done.
Yeah. New trusts, clean slate.
Brand new foreign grantors trust, brand new filings.
Yeah.
So unfortunately, the damage caused by the pirates that undermined everything can't be recovered from those filings, can be recovered from new tax filings, which is what we're doing.
Yeah. So all is not lost. It's just been a delay because of what happened. That's all. And in actual fact, we've strengthened the process, like you've mentioned before. We're not using 30, 40 different trustees now, are we? So it's a much better way of doing it from a trustee perspective now.
As much as it pains me to say, there is some benefit in what they did, even though the last year has been very, very painful for so many people. There is some benefit to it. Not that I want to thank them for doing it, because there was no, apart from their own selfish agenda and fear, which is the reason why they did it, because they were afraid and greedy at the same time. It's both driven by fear and greed. No, we could have done without it, and we'd now be here with a very different scenario if it hadn't have been for the sabotage.
That's true, but we will soon be in a very different scenario as well, which we're all looking forward to. So next question is, how does the IRS handle the verification of multi-million-dollar wages and tax transcripts? How do manual reviews function under the 2 million safe harbor rule?
Well, the IRS is, you think of how big this organization is. How many tax returns are they processing every year? Hundreds of millions. So just imagine that you were going to run the IRS, right? And at your fingertips, you have now got AI, you've got databases, you've got technology departments that can build you an automated system. Or you're going to run it manually. And you're going to have people sitting in an office looking at bits of paper and, studying all of the tax filings manually. I think there's nobody around that's ever run an organization that wouldn't go for the automated option. Yeah? If you had the ability to automate it all, you would do that, for sure you would. Which is what they've done. So their system is based on algorithmic system that is linked to their database. Everything is electronic. In fact, if you tried to file, I found this out yesterday, if you tried to file 1099 on paper now, they won't even take it into their system. They've stopped processing paper filings. And because they want everything digital, right? So what we've done is we built our filing method so that it fits in with the IRS's algorithmic database-driven system, so that there shouldn't be any manual reviews of any of the filings.
No.
Because we don't want them.
No.
We want to be able to sail through without there being any IRS department suddenly pulling the file out and looking over it manually. Not because there's anything wrong with it.
No.
Just because we don't want the hassle of being involved in reviews.
Exactly. And the delays that will come from that, like we said earlier, it could be up to a year before you could see that. Would you rather not just keep it under the 2 million limit, let it sail through the automations, and just keep cycling that every year? And if you do need more money for a project, whatever that project is, we've given you a solution for that as well, which is a real good workable solution, by getting other people to come in and open up foreign grantor trusts and do their own filings too, rather than expecting investors to push the money up front. So there's lots of different ways that you can do this. I can see it. I can see a lot of these questions are surrounding, how can I get more? How can I get more? How can I get more? And while we're not saying your intentions are not pure with that, you've also got to consider that 2 million a year is, in British pounds, it's £4,000 a day, guys. And if you're a couple within a family unit, that's 4 million. So that's £8,000 every day that you have for, lifestyle, buying things, whatever it is you need to do. So unless you've got some huge project that you absolutely need to fund, I don't really understand why people would want more than that or need more than that. I really don't.
The way to get more, if you really need more, and it shouldn't apply to hardly anybody in our community, but if you really needed more and you wanted to get it quicker, if it were me and I really wanted more, I would recruit people who are not doing signature credit tax redirection.
Yeah.
I would go to them and say, hey, I have a way of financing my needs, and you've got taxes that could be redirected that could help me to do that.
Yeah.
I will finance your enrollment into this program. And when you get your tax redirections into your foreign grant or trust, you give me whatever percentage of them for financing your program.
Yeah.
So everybody wins, yeah?
Yeah.
Whatever percentage you wanted them to give you, you could agree that. They're not putting anything into it to get it started.
No.
You're financing it for them. And then when they start to get their tax redirection, whatever percentage you've agreed to share, you could do that. And then they would carry on every year thereafter, and they'd love you for life, wouldn't they?
Yeah.
Because you've now enrolled them in a program that could be paying them up to $2 million a year, which didn't cost them anything up front.
Yeah. And they would have never known about it in the first place. Yeah. So
that's what I would do. If you go around all your circle of friends who aren't doing this, you could bring them in as, you could become an advocate, you could bring them in and they could fund their own enrollment. Or you could go to them and say, hey, I need 10 million for this thing that I'm doing, you know all about it, and I found a way of financing it, so I'll contribute and make the donation for you, as long as you give me whatever percentage you agree.
Yeah.
When it comes in, and everyone's a winner. Yeah.
And then you've also got to consider the back end fees that are coming in as well. So if you are an advocate, you're going to get a percentage of the recoupment that comes in, the value of the recoupment itself. That could contribute towards your project if you have one. So being an advocate is a great way for leverage too.
I was looking, I know this is a slight diversion, but it is kind of relevant. I was looking, watching an interview with Sasha Stone yesterday evening. Now he's got this vision of building micronations around the world.
Yeah,
I love it. Fantastic. Yeah. There are independent nations that will operate with their own infrastructure. Exactly what we want to do in our freedom plan, right?
Mm-hmm.
Now he's got huge numbers of followers who follow his projects and his interviews and his all of the things he's been talking about for years. He's got a big following, right? If I was Sasha Stone and I wanted to finance these nations, these independent micronations, I would go to the people that want to be part of those micronations and say, why don't you enroll in the Monopoly Game Changer?
Yeah. Which
will cost you this much to get this much out of it, massively more than your donation, and then you can donate some of your tax redirection to finance this nation. And you're not going to get that tax redirection just to finance the nation. You're going to get it every year. So at the beginning, you can all of this, hundreds, 500,000 people could finance a micronation.
Yeah, together.
Through tax redirection.
And then continue to fund the growth of that, the infrastructure of that, moving forwards every single year.
Then the nation can be funded every year from a share of tax redirections that come in every year. Exactly what we're planning to do.
Exactly what we're planning.
It's the same model. It's we're doing it for our community. Sasha Stone could do it for his. There's lots of people out there who want independent nations, right?
Yeah, yeah. There's some big movements out there. Some big movements out there. There's a huge one on TikTok called Wild Minds, where they do the same thing. They have people who either have land or who know someone that has land. They build communities. They are self-sufficient. They grow their own food, their own livestock. They have schooling for the children. These are people who want to do it on a physical ground floor level and build communities and build these little nations, like you call it. But it all requires funding.
Well, the alternative if you want to finance a micronation, you're going to have to raise funding somewhere.
Yeah.
You can't go to the banks and say, we're setting up a micronation, will you finance it? They won't do it.
No.
You can't do crowdfunding. They're not going to, no crowdfunding platform in the world is going to finance an independent nation to compete with the matrix. They won't do it.
No.
So then you could go privately, you could try and set up a cryptocurrency token system and say we're building a nation, and possibly cryptocurrency could help you do that. People investing in that token could potentially do it. But then you're going to have a bit of a job to convince them that this micronation is going to give them a return on their investment, because it's a nation. It's not a business.
No.
So what are they investing in? They're investing in the infrastructure of a nation that returns them nothing.
Yeah.
Or you could use tax.
I know what I would use. Let's move on to the next question then. So how does, now we're talking about this, we're talking about, how do we fund a nation? How does the 20% organizational donation structure operate when the annual recoupments of 2 million are dispersed? So if we use that 2 million as an example, someone's had their 2 million. How does the 20% towards the Freedom Plan, how does that work, mechanically speaking?
So 2 million, 2 million comes in to the Foreign Grantor Trust that is filed 1099 OID.
Yeah.
It's going to move that 2 million to the second Foreign Grantors Trust.
Yeah.
Same grantor, two different trusts.
Yeah.
It's going to make a donation to the second Foreign Grantors Trust. So Trust 1 donates to Trust 2. Trust 2 has now got $2 million sitting in it.
Yeah.
Trust number 2, which is the the Asset Fortress Protocol, the private treasury, makes a donation of 20% to the Old Souls Nation, which is for the Freedom Plan.
Yeah.
Foreign Grantor Trust number 2, the Asset Fortress Protocol, has now issued negotiable instruments equal to 20% of the 2 million, 400,000. Yeah?
Yeah.
Which it can recoup the following year.
Yeah.
And repeat the process.
And repeat the process. So you are never going to be on a diminishing amount of recoupment year on year. You're not going to go and put your 400,000 into the Freedom Plan as great as that's going to be, and then the following year redirect 1.6, because that 400,000, like you said, is a signature credit event, isn't it? So it's everything's been thought of, guys. Everything's been thought of in terms of how this works.
And that let's say we had 10,000 people doing that. Look at the budget we'll have for our nation.
I know.
What can we do with that to really do it properly? To get if we wanted to go and get land, we could go and get it. If we wanted to have all of our completely independent infrastructure, we can finance it.
Yeah.
Not just once, but every year.
Exactly.
And those people who are involved in that community, they don't have to do anything other than redirect 20% of their 2 million every year, which will go up, because I'm sure the IRS will increase the limit over time.
Yeah.
That 2 million, I'm sure, will go up.
Yeah. But this is what we're striving for. This is what we talk about. Not enough, but we will be soon. We're not going to be having Q&As about tax redirection before long. We're going to be having Q&As on webinars, and the questions are going to be, when will the free energy unit for my home be available? How soon? How close are they to manufacturing rollout? When is the atmospheric water? How long does it take to actually get one of the atmospheric water units, and how many gallons a day can it produce for my family of 4? These are the kind of questions we're going to start getting. And these are the kind of questions that we want to start getting. So let's wrap up section 6, Ian. There's one final question here. How do members who previously enrolled into programs such as BPR, MSR, how do they upgrade to the Monopoly Game Changer protocol? And do they receive any credit for prior payments?
Yeah, 100%. So, if the members was doing 2022, 23, 24 bank payment recoupments, as it used to be called, up to the sabotage, now they can do 25, they can include 25, they can go back to pre-2022 year, and they can upgrade. They might not have the Envoy protocol, they might not have the Asset Fortress protocol. They might have just been doing bank payment recoupments.
Yeah.
So you have a consultation. Whatever you funded so far, you can add to it to include the increased amount of signature credit, maybe, and then that would come with the Envoy and the Asset Fortress protocol, which you might not already have, which is what I've said on many of the webinars. It's like people keep saying, we've already got this. Well, we look at it and they haven't already got it. They've got what was bank payment recoupments. They haven't got the Envoy protocol. They haven't got the Asset Fortress protocol.
No. So check your account is what I would say. Check your members account, have a look at what your actual live processes are. And if there's anything missing, you really need to be talking to a consultant about that. If you've got credits, they can be used, as Ian's mentioned. But this Monopoly Game Changer protocol, when you break it down into the individuals, they're the individual protocols that you really want to be a part of if you haven't already got them. Because you're going to need them. You're going to need the right standing as far as, being the holding the office of General Executive. Moving forwards, you really do need to have that. A lot of people, I don't think, understand the significance of that, but it is important. You're going to need to have your Asset Fortress. How on earth are you going to protect your assets when you start, purchasing them with the tax redirection? Are you going to leave them in the system, or are you going to protect them? So there's elements to this that you may not have, guys, that you really need to start considering, because we are right on the cusp of this coming in. And once the dam breaks, there's going to be an issue with people wanting to do this and not necessarily being able to. They're going to have to get in a very long line.
And nobody's lost anything. I've heard many times, I paid for whatever it was in the past, and do I have to pay again? No, you get a credit note for everything.
Yeah.
There's not one process that we've ever offered that hasn't had a credit note attached to it.
No.
Nobody's ever lost anything, even though when at the very early days, we offered some processes that ultimately were withdrawn. They weren't successful enough. And people who funded those still get a credit note to offset against what we're doing today.
Exactly.
Nobody ever lost anything. All this bullshit on the internet about people saying, I paid and I never got a result. Well, it's because you didn't stay on the bus long enough. That's why.
I think if I was to be completely blunt with that, the only people who not necessarily have lost, but the only people that have had to do more is us, because we're having to then do more processes, refile, more grantor trusts, move you from one process that did, maybe it didn't pan out the way we wanted. It wasn't for lack of effort. The work was put in, the hours were put in. We didn't get the result we wanted. You've got a credit note. Now we're going to move you into something completely different that we are working on now, but it still requires time, work, effort, hours on behalf of the team. We're doing that without extra charge. So you have to consider that as well. We are an organization that is still having to push forwards and move forwards and put the hours and the effort in to deliver the result that we want for all of our members.
And also, a lot of people don't realize that whatever they paid in the past wasn't paid to this mythical central bank account. People claim that there was some mythical trust or bank account that everyone pays to. That it belongs to all the members, which is a story that was going around a lot last year. Now, they paid the service provider that provided an administration service. And all of those funds that were in reserve were then stolen by Amy Sanger. So we're not sitting here with everyone's donation from the past, waiting, thinking, well, we'll just use that for something else. No, we haven't got it anymore because it was either spent on providing the administration service from the past, or it was stolen by Amy Sanger.
Yep.
Which is why there's the case in New York going on, which I'm hoping we're going to have a decision on any time now.
Yeah. Alrighty, let's move on because we're coming close up to the 2-hour marker today. It's been a long one, so appreciate you guys and appreciate your comments as well. But let's just move on now to the final section, and then we're going to give you a very quick sneak peek into this week's coming webinar on the 15th as well. So section 7, let's talk a little bit about gold reserves as well. Who holds legal title to the global gold reserves under the current administrative bankruptcy structure? Oh, it looks like we may have lost Ian for a second. Let's just hold fire and see if he comes back. We've mentioned previously that gold and silver are some of the only tangible assets that you can hold legal title to within your trust. So land, there is certain land that you can do that with. I think church land is one of them. Not that you would necessarily own a church or buy a church, but I know some people have bought old churches and old chapels and converted them into beautiful homes. And if they're sitting on that land, that might be an option for someone to think about. But gold and silver is certainly one of them that you can put in there. In terms of the global capacity for this, we've got a question here. Why is the global capacity for this specific fiduciary task redirection protocol limited to approximately 500,000 participants worldwide? It's really down to how much taxes are paid on the 945 module. So when you combine all the investment banks together and you look at how much they're paying, bearing in mind that they are, number one, acting as nominees, number two, not filing 1099 OID because they don't want to. They are acting as nominees even though they have legal title over the securities that are being traded, and we are classed as, have beneficial ownership over those. They don't want 1099 filing. They're quite happy just to pay the taxes. But here's the rub. They only pay the minimal amount of taxes necessary on that 945, which basically means that what is due is way more, but they pay the minimum. Why do they pay the minimum? They only pay the minimum because they don't want that 945 module to have a big beacon on top of it saying, hey, look at all of these taxes that are owed back to you guys. So the 500,000 participants worldwide is purely down to how much combined amount is paid in tax withholding on the 945 versus what's paid on the 1120. And when you think about what's paid on the 1120, we've spoken about this many times before as well. The amount of taxes paid on that module far exceed the 945. So while we have the ability to move from the 1120 to the 945, when you combine the taxes paid and you then divide that by the $2 million limit, that is where the 500,000 people come in. It's just all down to how much taxes are paid. They limit this for a reason, guys. They don't want control. We spoke about this earlier as well when Ian was talking about the limit. So a lot of it is still to do with control, and keeping their system from pivoting too much in one direction versus another. They don't want huge shifts. If you had a few members that suddenly were redirecting hundreds of millions of dollars and you times that by a few thousand people, that's trillions of dollars that are being moved within the system. They don't want that because that's going to do, a lot to the financial markets, those kind of big shifts. So it's kept at the 2 million for a reason. And then when we talk about 500,000 participants worldwide, that is just the simple mechanics of how much taxes withholding is being paid on the 1120 and the 945 versus the 2 million limit. Hope that makes sense. In terms of other answers, I don't think we have any other questions here. Looking at this, I've talked about legal title for gold reserves under the current administrative bankruptcy structure. I think you'll probably find that that is the US Treasury, because they are the bankruptcy trustee. So they will probably be responsible for that. I will let Ian clarify that if he comes back. I think he's having internet issues at the moment. So let me wrap this up for you today with what we're talking about on Saturday. Let's talk a little bit now about our upcoming webinar for this coming week. The subject that we're going to talk about is why your signature generates backup withholding taxes, and that you can redirect those over the lifetime of you playing this game of Monopoly as a pro. That could be anywhere from 50 to 100 million over the course of the next 25 to 50 years, based on that 2 million per year limit. So let's talk a little bit about that, because there's a lot bandied around the internet right now when you talk about 1099 OID filings. And without giving too much away, if you went on the internet, I don't want to give up too much away about Saturday's webinar, but if you go online and you started typing in 1099 OID filings, you're going to come up with a load of horrific information about why it's fraud, why you could go to jail. It's going to scare a lot of people who are uneducated to what this actually is. Why can we do this? Why can a creditor redirect 945 taxes where a debtor cannot? And that is the difference between the information that you will see, typically AI generated or AI populated information surrounding 1099 OID filings, is that people are filing as a debtor entity using their SSN number. If the system is bankrupt and you are a debtor, are you owed anything back? Just think about that logically. If you were in a bankruptcy right now, a real bankruptcy right now, and the creditors come in, the creditors are the people that the money is owed to, and you are one of the debtors, what right do you have to reclaim anything within that bankruptcy? You have none. So put that same scenario into what people have been doing in an uneducated way surrounding 1099 OID filings. If they are filing as a debtor entity in a bankruptcy, this is what's getting them into trouble. This is why they're getting frivolous filing fines. What we're doing is filing as a creditor. The foreign grantor trust, as holder in due course, is the creditor entity. It is filing on behalf of the living human being, the living man, the living woman, as the beneficiary. So foreign grantor trust is a creditor entity. It is filing as a creditor entity, which means that those taxes are owed back to that entity on behalf of the beneficiary. So it isn't even the living man or woman that is doing the filing. It's the foreign grantor trust that's doing that. But it's doing it with the right standing, and it's doing it as a holder in due course with creditor status. So I hope that makes some sense. That is what Ian's going to be talking about on Saturday. If you want to register for Saturday's webinar, you need to go here, roswebinars.is. Register for the webinar. If you are one of our advocates here, you will have your own advocate link that you can use. If you are interested in the technical reports that back up everything that Ian and I talk about on these webinars, then go to ecclesialaw.is, and you'll see anywhere from 50 to 60 different technical reports on there that Ian has put together, breaking down all the UCC code, all the IRS statutes, particularly IRS publication 1212, that a lot of it hinges surrounding that. But if you really want to get into the detail, that's the place to go. If you want to look at more of our content that we do here on the platform, then you can go to rosmediaplatform.is as well. We've got a ton of information on there, and we would love to get more people watching that. So that's all I've got to say, guys. It doesn't look like Ian's going to be joining us back. I think his internet has come down. Possibly he may have had a power cut. I know that those are quite popular. He does get a few power cuts and a few internet outages. So I hope that we've covered most of your questions and your questions in the comments. Appreciate every one of you being here. Look forward to seeing you on the webinar on Saturday. That's at 10 a.m. UK time. And you've got all the details that we've given you just now in terms of where to find the different materials. So one last time, this is the URL for the webinars. Go to roswebinars.is. If you want the technical reports, go to ecclesialaw.is. If you want to see more of Ian and I digging into these subjects, and we're going to be doing a deep dive on this particular subject matter on Thursday as well. So Saturday's webinar, if you want the technical and the deep, excuse me, and the deep dive, that's going to be Thursday this week. And you'll see that on the ROS Media platform, or you can join us live across our socials and live here on StreamYard. So have a great day. We will talk to you soon and hope to see you on Thursday for the deep dive and also on Saturday for our flagship webinar. Bye for now, guys.